Good morning, good afternoon, good evening, whatever time of day it is. Welcome to this week's Friday Fix, where myself, Ryan from PIQ, and of course Alex and Jay from Alpha Picks will be discussing the themes that matter most to markets. As usual, nothing described or discussed on the podcast is trading or investment advice. We have no affiliations with anyone. If we did, we would make it very clear. Do not apologise for foul and fruity language or indeed tangents that are gone down. Long winding tangents sometimes. But we bring it back and hopefully we add a bit of value to your day and put a smile on your face. Lads, how are you?
It's been a week. We were on last week, weren't we? Has it been 2 weeks?
It's 2 weeks because it's Good Friday last week.
That was the one. Yeah.
You're always on holiday, so probably all blurs into one.
Well, it was a pleasure. Actually, do you know what? I played golf this Monday on bank holiday, and I shot a back 944, which is, if you know, you know.
Was it the windmill or the clown's mouth that got you?
I was playing off the ladies' tees.
Yeah, not crazy golf then.
Yeah, could have been both.
It's normally the windmill that gets me, but that's
is it? Yeah. That's your football celebration, isn't it?
Yeah, well, exactly that. Yeah, and there's Jay getting hampered by the toilet hole.
Jay, can we just test your audio? Are you crisp and clear?
I mean, I think about 90 seconds into the call for the joke to come up is a new record.
He's no longer in the Little Chef toilets waiting for Big George the trucker.
Very clear, very crisp. We'll look forward to his insights.
Yeah.
So the big story, which we may as well discuss to get out of the way, is obviously I guess we can call it peace? We can't call it peace. Ceasefire.
No,
let's call it a temporary. I mean, we can't even really call it a ceasefire if we're talking about Israel and Lebanon. We can't call it a reopening of the Strait either. So a temporary lull was how I thought we could express it.
I would say maybe a reduction in kinetic activity.
Ooh, nice.
Hey?
Yeah.
This is what happens when I don't drink for a week.
Did you read that on Reuters? Or yeah?
No, not at all. I won't reveal my sources.
So yeah, the long and short of it is obviously there was a huge amount of anticipation that, given Trump's social media posts on Tuesday, that an entire civilization was going to be wiped out. There was certainly a strong bounce, let's put it that way, on Wednesday morning in the markets. Now, from our point of view, and I actually said this to Jay on Wednesday morning, first thing was that, like, one taco doesn't make a meal. And it's like this, I thought about myself. And yeah, I certainly wasn't convinced on Wednesday morning that this was really anything to get too excited about. Yeah. And interesting, your thoughts on it. From my perspective, there are lots of elements to it. The 10-point proposal didn't make any sense. And then the points US and Israel wanted to add it on, some of those hard conditions, obviously nuclear weapons being one of them, but also the Strait of Hormuz, etc. I just didn't think it just didn't make any sense to anyone.
No.
And so we've seen already that nothing has really materialized, particularly in terms of flow through the Strait. And if anything, I'm slightly surprised at how, like in the equity space, the S&P managed to trade higher again yesterday, when from my perspective, this isn't really a game changer in any respects. And I think, to be honest, like when you look at Brent, I would argue that's probably the most accurate in terms of pricing actual sentiment right now. But yeah, I mean, I don't know what your thoughts.
Well, I think it's important to realize that a cessation of hostilities, or whatever terms we're going to be using for this, and reopening the Strait are completely two separate things. The sooner we get our heads around that, the better. Also, there's a reopening of the Strait, and then there's the traffic in the Strait going back to pre-conflict levels. Again, two completely separate things. Also, not all vessels are created equal. So we're seeing 14 vessels went through or whatever. Yeah, two of them were, Uncle Bob's fishing boat, backwards and forwards. But all this stuff's got to be taken into account. The thing is, I think equities, almost like mirroring what we saw in COVID, as soon as there was light at the end of the tunnel, after the big sell-off, no one wanted to be left with their pants down. Everyone wanted to make sure they were part of the rally and part of, when things do start normalizing. And I think that's what we're seeing here. I think enough, people have seen enough. We've seen, Trump walk back a little bit. from like the end of humanity. I mean, pushing the big red button, and people are looking at this saying, well, do you know what? Is as far as it's going now, is maybe, obviously, I want to say unlikely. I mean, just like 51% sure that things aren't going to get any worse in terms of spillover into the real world. And why should software stocks be down on the back of this? They shouldn't really. So that's why I think stocks are rallying, just because they're saying, well, look, it's not going to get that much worse in terms of the global economy. But then the reason why Brent is staying high is because even if the Strait of Hormuz, even if oil tankers started sailing backwards and forwards now, the oil market is still going to be out of flux for quite months. So that's why especially the prompt spread, or dated, whatever you want to call it. So like the front, like today's physical price is different to the futures. It's well above that because people are still clambering for physical crude. This is why I think the shipping names are still doing well. The vessel owners, your Nordic and your Scandi tanker owners are still printing money, and it's the reason why your the daily OTC market and that, and crude and stuff, which I'm fortunate enough to have a little bit of an insight onto and see what's going through there. It's why it's still screaming higher, because even if it was all solved overnight, oil, the energy markets are still fucked for the foreseeable. So I think there's we can't conflate crude's trading up here, therefore people don't believe that everything's going to become better. Crude could believe that things will be better in a month, but your front month ain't going to move on the back of that, because your front month's pricing what's going on at the moment. So there are, again, it's very non-binary. Sound like someone that should be wearing some blue hair, but it is. I think there's a lot of nuances in this market at the moment, and unfortunately, as is standard, your regular talking heads on social media and whatnot will only want to see it as ceasefire on, ceasefire off, and it's not about that. There's far more at play, and I think that's that's why we're seeing energy markets supposedly, or face value, saying one thing, equity supposedly saying another.
Yeah, and then just adding in an FX element, only from my standpoint, is I think it's really interesting that we talk about binary, non-binary. A lot of the content I'm seeing, and even on the street at the minute, has very binary outcomes for the US dollar over the coming quarter. And again, I think that is actually pretty misleading, because certainly you've got this situation whereby the dollar should remain bid, because you're going to have this sort of risk aversion premium linger for a long time. And again, something that should exist in even the oil markets, etc. But certainly in the dollar, you're going to see that premium remain. And also, given US is a net energy exporter now, the terms of trade positioning does help the dollar. But then on the other side, you're going to see rallies being capped on, again, de-escalation, is that there is some premium that can be priced out, which will help to cap any potential rallies there. And then you've also got the situation whereby the carry of the US dollar is being diminishing relative to euro and sterling, because obviously euro and sterling have been pricing in significant rate hikes this year, less so for the US. And so the desirability of buying dollars for the relative yield has come off. So again, I think when you look at like a US dollar, I see it pretty range bound for the coming months, irrespective of what happens. And I think that's one of the beauties of financial markets, is that your different asset classes can tell you different things because of their individual nuances. And I would say that the equity space is the most generic sort of sentiment barometer for, as you say, whether it's accurate or not, ceasefire, no ceasefire.
Yeah, absolutely. Absolutely. Jay, what are your thoughts on this?
Yeah, so the points you're making about oil and energy markets is a good one, because we can throw around the phrase taco, which markets love at the moment, but there isn't really a taco in the oil market because of the damage that's been done. It doesn't get fixed overnight. It's very different to, say, the tariff story last April. That can be undone with one announcement. So I think something I was listening to this week, and I've forgotten the source or what it was, but some of the VLCC ships which do the longest routes, the VLCCs that left, the last ones to leave before the strait got shut, they should be arriving at their destination this week. So you're going to start seeing actual shortages come into play for some of these furthest routes here on out. And obviously some of the shorter routes started feeling that pressure just several weeks in, so kind of mid-March, I think, mainly like your Japan type of nations. So you're going to have this lasting effect in energy, but then kind of similar to the points you made on equities, something we often speak about on this show is the default is up and to the right. And if there's no reason to sell equities because the worst of the escalation is behind us, you're going to have that initial knee-jerk reaction up, and then stock will continue to trend up and to the right because of the fundamentals, and predominantly their company is to print cash, and we'll look past other factors.
Absolutely. I think you're right to mention that about how, just think of some of these sailors, poor blokes, they've been on this boat and like, so when they left, everything was fine. They're like, what the fuck's going on? But, we're already seeing like in the Far East, like, in China and that, one of the big industrial areas that kind of there are a lot of the, you know what China's like one area does textiles, one area does, chips, one area does automation and stuff. There's one area that kind of known for its plastic industry, and the plastic, like raw prices for plastics, etc., are starting to scream higher because they've only got one or two more like kind of deliveries coming in for like the fuel, the energy that's needed to create plastics. And these are all the things. These are all these second round effects, right? And I think we did say 2 weeks ago that it'll be like mid-April before we start seeing these secondary, tertiary round effects. And lo and behold, now that's what we're starting to see. So it'd be an interesting one. And again, not just for plastics, but, chemical industry. Like Germany's chemical industry, was pretty big. Obviously, it's taken a hammering recently. But these are things that are going to really start feeling the pain. Just taking it back to FX. I know, obviously, you guys, especially you, Alex, on especially the rates and stuff. Bloomberg put out a piece this morning regarding, the way they framed it is that, 6 weeks of Middle East crisis have wiped out 6 BOE rate cuts. And if you look at the chart, it's quite, we are kind of getting back to those levels last seen, trust crisis, and then, when Labour first took over. Well, sorry, just before Labour first took over. But what are your thoughts on that? Because, like we said, even if there is a ceasefire tomorrow, even if the Strait of Hormuz did kind of open up a little bit, energy inflation is here to stay. So what does the Bank of England do there?
Yeah, I think it is an interesting one.
Sorry, not just Bank of England, but just the Fed as well. But
so I think for the Fed, it's slightly more cushioned because they obviously aren't as impacted, and certainly the shift in rate pricing, I would say, is pretty accurate for the Fed, whereby pricing through to year end is basically flat / a little bit of a bias towards maybe one hike, when in actual fact you could argue their current situation on track with nothing going on would be one cut. So I think like that insurance 25 basis points of pricing still makes complete sense. When you look to the UK, is that you do have to factor in more of that energy-driven inflation pass through. And obviously we spoke about the OECD data that, they're putting inflation in the UK at 4% a year end. And where oil is at the minute and other energy products, the longer this does go on, that's going to creep to 4.5%, 5%, etc. But I still go on that thing of like how much of an additional buffer is reasonable to factor in. So let's say the benchmark of the Fed is like, let's price in an insurance 25 bips of tightening. So the UK is more impacted, yes, but does that factor in 50 basis points worth of buffer? And, where do you basically position that as? And I still think when you look at it and see, 3 hikes, 4 hikes, whatever the latest is this morning, I think that does still seem pretty excessive, given 2 factors. One that you mentioned, in the how much of this interest rate hike can really stem the problems that are being driven by an external factor, i.e. oil prices. And 2 is how much do you want to drive the UK economy into the ground by doing this tightening measure. So yeah, I don't know if that answers your question.
No, it does. I'm just like looking at these 2 morons in the room that kind of started talking to themselves. But we had those on the Morning Blast as well. So I think the 2 trolls that are on there. So yes, we've all in the best. People that don't know us playing this back, we do have like live chat. But these 2 people can fuck off. But anyway, what's the next topic?
The next topic is, you mentioned it, alluded to, cybersecurity, software stocks. So this was an interesting one because I saw the article, the piece that came out with Anthropic on Wednesday, actually, where essentially their new model that they brought out, which they're giving to like probably the biggest tech companies, called Claude Mythos Preview. And it is pretty insane. I mean, you've got to take it at face value. They say they've spotted thousands of zero-day vulnerabilities in these tech operating systems and platforms, which is pretty insane that these issues haven't been picked up by the respective companies in the past. Now, obviously, Cloudflare closed down 7% yesterday, CrowdStrike down 8% yesterday, etc., because it does call into question how good these cybersecurity companies are if AI tools are finding out problems that they couldn't identify in the past.
Yeah.
But, and before I get your opinions on, both your opinions on this, one of the takes I have initially is that it's almost a case of, we've spoken about the ceasefire, we've spoken about the situation in Iran. Everyone's maybe a little bit bored of that now, 2 weeks in. So what do? They switch back to everything we were looking at pre-conflict, which is AI disruption. And all of a sudden that comes back on the menu, which, is that a little bit short-sighted? I don't know. But that's
it's almost like everyone has forgot about, is AI killing SaaS? Was it Michael Berry posted, or he deleted a tweet about Anthropic is basically eating Palantir's lunch and then deleted it, but Palantir stock got absolutely butchered? Was that yesterday?
Yeah, he definitely tweeted that out this week.
I don't know, but it is an odd one. But this Mythos thing is very bizarre. The fact that what we did, we had Bezant and Powell calling in basically all the bigwigs of Wall Street to basically get their opinions on what Mythos could do and how it could unravel the, fucking the whole, banking system. I think their fears are that it turns on, and bearing in mind it's found some of these zero-day events that have been apparently lurking in plain sight for 2 decades.
Years.
Some of them in 2 decades. So I mean, bearing in mind the global financial system runs off of Excel, maybe they're sitting there going, "Fuck, do you know what? If something like this is that good, are there vulnerabilities in the financial system that could be exploited, and all of a sudden everyone's bank account says 0, or better still, everyone's bank account says 1 billion? It's an interesting time, and obviously I am not an expert in this, and I'm not going to pretend to be, but the fact that they're calling emergency meetings on the back of this, the fact that Anthropic have decided to limit and not make Mythos public, and instead, what's Glass something is this new project they're doing, where basically they're getting all the experts in, AWS, everyone from software groups to banks, to get them involved, and so basically try and stress test everything they can to make sure it's safe. But yeah, it's definitely one to watch.
Jay, any thoughts?
Not much to add on to the points that you've made. I think what you're saying about kind of these previous narratives coming through, I think it's probably similar with the private credit names, which is an interlinked story with software because of their exposure, all coming back to the forefront of investors' minds.
Yeah,
I can't wait for an AI private credit tool to come out that basically can model the risks and the current valuations of some of these things that have been stuck in blue owls, funds that can't be redeemed for another 12 months, and just for it to spit out actually, do you know what, the accurate valuation of this is 20 cents on the dollar, and then everyone will be like, ooh.
The funny thing about this is obviously BlackRock were part of making the whole private credit available to retail. Retail have then done their arse on this, and now you've got BlackRock apparently yesterday launched this new opportunistic private credit fund, basically coming back into the market and picking up everything on 20 cents on the dollar. So, it's good money if you can do it. You set up the project. You set up the product that allows retail investors to be the institutional, exit. And then when retail does their arse, you set up a product that can then buy it back off retail for institutions.
Yeah, it's a funny old world. Actually, taking on that, it's like tangent on when we're talking about launching new things. Did you see yesterday that our old friend Bill Ackman?
Oh, Bill.
Billy is who his friends. He is basically, I think part of it is publicity stunt. Basically, he's looking to take Pershing Square public over in the States, which obviously currently is as a variation on the LSE. And he's looking at, separate to this, doing a spin-off fund that literally is trying to take advantage of complacency in the markets, were his own words, which is kind of call it contrarian bets or whatever you want to call it, which kind of is what Ackman's done in the past, if I'm honest. It's not like he's been massively with the crowd, but yeah, he's going to bring out this new fund. He says that essentially will make asymmetric trades against the prevailing narrative in the markets at that time, which I think is interesting. I mean, from any of the sort of, anyone who's like short only or the contrarian views, typically over a period of time, they tend not to perform that well for longevity. But, Ackman is a smart guy. Maybe he pulls it off.
Well, obviously, yeah, asymmetric risks are his bag, right? Asymmetric trades rather are his bag. Obviously, see the credit trades that he made over COVID, but there's an interesting one. I don't know. There's something not right about him. He does look like what was fucking Jeffrey Epstein's bird called? What was her name again? I've already forgotten.
Giselle Maxwell.
Yeah, if you look at him, he looks a bit like her. I'm just putting.
I've never heard that.
I've never seen them in the same room at the same time.
Okay. Yeah, I mean, on another conspiracy theory is Herbalife a Ponzi scheme?
Yeah,
that's the other one. Is it?
Absolutely.
Will we ever find out?
No. Next question.
The last point, actually, slight look ahead for anyone who's listening to this live versus in 38 minutes, is US inflation.
Yeah.
So obviously, core PCE from Fed from yesterday, slightly irrelevant. It's a bit stale, boo-hoo. But CPI out this afternoon is going to be interesting because one is it's for March. Two is it's forecasted to tick higher from 2.5 to 2.7%. And part of that should be a little bit of a pass-through from energy shock that we've had. So I think it'll be a really interesting one that it won't show us anything crazy yet, but I'd be very interested to see, like, when you dig into the details, what particular areas of the basket are being impacted already. And yeah, I think there could be some interesting stories.
Yeah, I think that a lot of this people will be happy to look through. But again, I think the only thing I'll be looking to take away from this is what is already being affected in this data, because it's only going to be getting worse in the next reading, if that makes sense.
Yes. Yeah. And it's like, where do you, even if you see some impact in from March, is that it's only going to be compounded. So let's say this is a 2.7, 2.8%, that becomes the new benchmark for April in terms of it's only going to kick higher. Let's put it that way.
Yeah.
So yeah, I think inflation could be an interesting one to watch for today.
No, absolutely.
But yeah, apart from that, that's pretty much my key thoughts for the week.
If
anyone has other stuff.
The only other thing I had in mind to just briefly chat about was the talks that are going on. Is it in Pakistan this weekend?
Saturday, meant to be, but there's already been some kind of sources, admittedly they're from TAS, which is the Iranian news organization. Oh, not going to sell many ice creams going at that speed. So saying that potentially the Iranians might not turn up, but again.
Yeah, so on that, do you think markets might sell off towards the end of today, going into a weekend of uncertainties again, which has kind of been the case?
I think we'll hear, my personal view is before the close, we'll get a decent reading on if it's going ahead or not, because obviously Vance will need to travel and Iranians will need to travel. I don't think they're going to travel on the day. Yeah. I think we're going to, if we get towards the end of the session and there are increasing rumors that it might not go ahead, then I think you're going to see some, profit taking or whatever, or some money being taken off the table. But yeah, again, there's going to be a lot of sources. There's going to be a lot of headlines for the next 8 hours, 9 hours. Yeah, definitely one to watch. Again, if you have got long and you have kind of flipped long on the back of the recent rally this week, well, what are we now? Potentially the 8th day of S&P green. So we definitely hit 7 yesterday. Would you be looking at your book now going, do you know what? Anything could happen this weekend. Let me just take something off the table. I certainly would.
Yeah, I think after the midweek move as well.
You can't go wrong, right? 5 days of being up on this week. You've had 4 days out of 5 up on the day. Why wouldn't you take a bit of profit if you got long last week?
Yeah,
I agree. I mean, you don't think Vance wants a cheeky weekend in Islamabad, irrespective of Iran? You don't think he wants a little bit of sunshine?
Well, is there sunshine in Islamabad this time of year? I don't know.
A lot of pollution, air pollution.
Yeah, exactly. It's a long smog, but yeah, about that.
Yeah. No, I agree. No, I think the last one I'd say on is, I mean, certainly from our portfolio, we've been sitting long cash, like 30%, 35% cash over the past 10 days. And even though we have missed out on some of this jump this week in the equity portion of the portfolio, I think like you don't want to be jumping in all guns blazing until we've got a lot more clarity. So
that. Well, we'll grow a pair, mate. Just wait. I'll tell you what, though. Before we go, one thing I need to flag is PIQ in association with AIQ. Completely coincidentally, that we're forming a JV. Their A stands for agriculture. We're actually launching a agricultural commodities focused dashboard or platform today, pretty much. So if anyone out there is interested in agricultural commodities, it's more tailored for like the brokers, farmers, actual people that know what they're doing with these markets, as in like want to see like weather forecasting and all that stuff like that. So do get in contact because we're looking for some beta testers. But exciting time.
Very nice.
Yeah,
exactly that. So I'll be an expert in corn markets next week. I'll be putting the culture in agriculture. Hang on, that's going to be the tagline, right? Let me go back to the designer. Perfect. Well, guys, we are due an in-person one now. The weather's getting better as well, so maybe next week or week after we can get our heads together and meet up somewhere and have a Friday fix over a few pints.
Agreed.
Very good.
Or martinis if you're Alex. Right, guys, absolute pleasure as always. Listeners, I hope we put a smile on your face and a bit of value into your day and week. Live chat bots that have been slagging me off and calling you have no idea how rude I can be. You've got away very easily, but there we go. Whatever you're doing this weekend, hopefully go out and touch some grass. Hopefully you have a great weekend, and we'll see you all next week.